Available inventory of unsold homes on the market is climbing every week very quickly. Many Americans are still buying, of course, seemingly undeterred by the trends that those of us who look at the data every day are seeing very clearly. We're working hard to chronicle this market shift for you to best explain what is slowing and what is not. That's what these weekly videos are for. Every week, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos reports with your clients, your buyers and sellers, right now might be the time to step up. Go to altosresearch.com, book a free consult with our team, because everyone is worried about what's happening right now. They need you to help them see clearly. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's what we're looking at in the data for the week of June 20th, 2022. Available inventory of unsold single-family homes rose another 5.6% this week to 419,000. We have 18% more homes on the market now than last year at this time. By the end of the month, we will have more homes on the market than we did at the peak all last year, and inventory will keep climbing through September, maybe even October of this year. Inventory is growing for three reasons. The insatiable buyer demand that we've had over the last 2 years is finally starting to be satiated. With rising rates and falling financial markets, many buyers are just priced out, and they have to sit on the sidelines until something changes. On the supply side, higher mortgage rates mean fewer homes look good as investment properties. So the doubling up phenomenon we've had over the last decade, where when I buy a new house, I keep the first one as an investment property. This trade looks less attractive when the new mortgage is at 6% rather than at 3%. So more of those first homes are being listed back on the market. So therefore, inventory climbs. The third thing adding to supply right now are probably some investors using the opportunity to sell homes and raise capital. Those who anticipate a long, deep market correction, those are preparing, winter's coming and they're preparing right now. We don't have evidence of a lot of investor sellers selling, but it's something to keep an eye on, especially in places like Phoenix, which has had a lot of speculative buyers. Home prices, meanwhile, are at their record highs still. Median price of a single-family home in the U.S. is $454,000 this week. That actually ticked up from last week and is still 13% higher than last year at this time. The end of June usually is the peak of home prices. So it should be no surprise that we're still at record highs. Although I confess that it is a little bit of a surprise to me because I look at this market cooling every day and it just makes me forget at how strong it has been. So as the market normalizes, I suppose it is normal. We're at our peak home price time of the year right now, so we are at record high home prices. The price of the new listings is unchanged this week at $425,000. That's the light red line here, and it starts to deviate from the dark red line. That's the normal behavior for midsummer. The price of the new listings is not falling week to week. That says there's enough sellers getting their bids and that the prices are holding. Are these new sellers delusional? Will they be surprised by weak demand? Some of them will be surprised. But those that are pricing properly are indeed moving, and that seems like a good sign. Maybe we're just early in the market correction. So keep your eyes on the price of the new listings, the light red line here, as a leading indicator of transactions that will happen out in the future. The price of the new listings cohort, this newly listed cohort, peaked this year at the last week of May, which is exactly when you'd expect it to in pre-pandemic normal market conditions. So this says to me normal, not scary or panic. These are looking like normal market behaviors. But of course, the story this summer is price reductions. So this is how quickly the market is slowing. We can see it turn. Remember that about a third of homes take a price cut before they sell in normal conditions nationally. When the market's hot, it's fewer than that. You can see the dark red line is this year, and the light red line is last year. When demand is off the charts, very few home price reductions, record few home price reductions. The price reductions now are accelerating faster than they ever have. So this is us getting very quickly back to normal levels, meaning by like July, we'll have about a third of the market who've had a price cut in their asking prices. What's going to be fascinating is to see when the dark red line curves. When does it flatten at its seasonal peak? In 2018, the dark blue line here, we had rising rates and that slowed buyers. So price reductions peaked late in the year at 37% in November before the holiday reset. So it sure looks like we're going to have more than that this year, probably 40% in price reductions, and peaking about that time late in the year. So sellers now, this is why your imperative is to price properly now and don't get behind this curve. You can see the yellow line here, that's 2019. So interest rates peaked in 2018, and then it took most of the following year for the momentum to resume for buyers. So by the end of 2019, though, home price gains were essentially flat from the prior year. And you can already see they're up a little bit, but you can already see for 2023, unlikely to have home price gains next year, any home price gains next year. While the bidding wars and the immediate sales have dominated the real estate, market over the last 2 years, this week the percentage of homes going into contract immediately after listing is down to 22.7%. So like prices, I keep expecting this to fall faster than it has been. Last year, the low point was the 4th of July holiday. And you can see that low point in the middle of the chart here. That's when all transactions slow way down over that 4th of July weekend. Keep your eyes on this pace of the immediate sales, though, to see whether buyers slow further after the holiday or whether they resume a bit like they did last year. I could expect that demand will continue to slide and we'll have fewer immediate sales as the longer we go in the year. But I've been wrong before, so we're just going to have to measure each week and report as we can. Here's another leading indicator that I haven't talked about much, but this is going to be important to watch as the market cools. This is the percent of the active market that are relisted. So we watch them on the market, then they get offers and go into contract, or sometimes they get no offers and they get withdrawn. Then they come back on the market maybe 30 or 60 days later. When the market cools, buyers get cold feet. Sometimes the financing fails. Sometimes the house is overpriced and gets no offers, and the seller withdraws the listings, maybe switches realtors, and then relists. There are always some relistings happening. And you can see here each year there's a spike in January because homes get pulled over the holidays and then relisted. Depending on the local realtor associations, sometimes agents do this to reset the days on market and make it look like a fresh new listing. And when the market slows and all of a sudden you didn't have offers, that can be really tempting. So this week, we have 1.6% of the active market has been relisted. And you can see the dark red line here gently climbing above the previous years. When the housing bubble burst in 2007, we could watch markets like San Jose, for example, where relists climbed to like 30% of the market. Everything was failing. Even the stuff that was good was still coming off the market and resetting the days on market. It was like 30%. So one thing we're watching right now is, do relists keep climbing? How far do they climb? It would be a really bearish signal and indicate that there's no backup offers. There's no offers at all. So when relists climb, That implies that transactions in the future are going to have to be done at lower prices. So we're going to keep an eye on the relists in the coming few weeks and really see if we can see a signal there. Agents, when you're selling and when you're counseling your sellers, this is one way to communicate with them. Yes, the market is still surprisingly strong for homes that are priced properly, but price reductions are climbing quickly. And the realists are climbing. So the ones that don't get priced right are going to have worse conditions later in the year. So if you need to have these conversations with your buyers and sellers, go to altosresearch.com and sign up so that you can have your data, your local data, in the hands of your potential buyers and sellers today. Okay, that's all the data we have time for today. More next week. Thank you.